Now, I'll be the first to admit that I've been burned out by crypto multiple times. That's not to say that I hate it or that I don't believe in it, but if you're in this space long enough, you do start to get tired of people talking in absolutes, claiming that something is the next big thing, that some project is going to easily be 1,000 times return. And I think it's truly ironic that for a space that prides itself on being counterculture to the BS of central banks and corporations and the plutocracies of the world, well, we do spread a lot of our own BS. And I bring this up because when I talk about DeFi and how it's being painted as the next big thing, I'm going to be looking at that objectively and not trying to repeat the mistakes that were made with ICOs. Because chasing returns is a great thing, and being an early adopter of an exciting new trend is awesome to partake in. So let's make sure we do it right this time and understand the whole picture for what it really is. So sit back, relax, and listen to my baritone pipes as we try to determine what the value proposition of DeFi really is and how you really make money with it. I think to begin that journey, how we understand what DeFi is and is not, we first need to understand what the problem is and what is the solution that DeFi is bringing to the table that makes it so valuable. Well, right now, every system in finance is essentially built on its own proprietary non-compatible technology stack that has a huge amount of human process behind it. The London Stock Exchange, the US NASDAQ, the Shanghai Stock Exchange, these are all built as islands. And if I wanted to trade across all of them, I'd have to integrate specifically into each of their technology stacks to do so. Concepts like being able to directly and atomically swap an asset traded on the LSE for one traded on the SSE is totally meaningless right now. That's because at the moment in finance, lending, borrowing, swapping, and issuance, these are all done on these little islands of technology. They require legal contracts and Excel spreadsheets, sent over email, and there's all this connective tissue and people, middlemen, lawyers. It's a mess. And yeah, the API economy is improving things, making the process somewhat more manageable, but there's no such thing as a standard API. This is essentially the reason why Plaid became a $5.3 billion company. And so hopefully you're starting to see where the value proposition is starting to form itself. It's not just what DeFi is bringing to the table, it's also what we look at as the existing solution set. This is not to say that the legacy finance space is stagnant. The internet, for example, helped make huge improvements on what came before. You used to have to phone your broker to place orders, as they had to physically be there and have to give permission to trade on the floor. But all that went away in the internet age, as you can go on to a centralized platform to trade on the stock markets. But even using these platforms, these brokers, you still have to register and create an account with them, and the assets that you hold on one account can't really interact directly with the assets you hold on another. And this is a core and key difference for assets and services that are built on public ledgers like Ethereum, because the moment that they're built on Ethereum, they become interoperable. You're able to seamlessly and programmatically move your assets from the services of one application built by one company or team or project to that of another, all facilitated by the same decentralized public ledger. So the public ledger acts as an interoperable platform for many startups to experiment and build better versions of existing products, such as stock exchanges, or entirely new products that are just not possible with the current systems and architecture. And yes, from a consumer point of view, the products and services are probably not going to change much in their appearance. What consumers will see is an improvement in speed. It'll take seconds and not days or weeks to move money between investment accounts. They'll have higher rates of interest offered on deposits. Seamless ability to swap between asset types without needing to go into cash as the interim asset, and fully customized consumer financial products rather than one size fits all. So here's a very important point to understand. Decentralized finance, DeFi, it's not about moving existing banks onto public ledgers. Rather, it's about unbundling of banking services, be that borrowing, lending, and investment, into applications that can all interoperate on a single public network and compete for users' wealth with the best offerings. DeFi is not trying to replace banks. Rather, banks are like newspapers coming into the internet age, and some will be able to make the transition, but not all. So I want to make sure you're aware that Doc is about to put out the new Digitex module for our Futures Masterclass. It's one of our best education series because it teaches you how to trade futures, and then we give specific examples of how to trade futures on certain exchanges. In this case, we're going to be showing you how to trade futures on the newly launched Digitex. And to celebrate their launch, you can get 40% off our Futures Masterclass up until the point we release the new module, which is today. So today is the last day you can get this really amazing discount on one of our best classes. If you want to learn how to trade futures and how to trade on one of the hottest new platforms, well, this is your opportunity. Just use the coupon Digitex at checkout. And again, today is your last day to do so. So don't delay, don't hesitate, and don't regret that you missed out. So I think the thing to understand about DeFi and really crypto as a whole is that unlike 2017, there are real services being built on real platforms now. The crypto industry and the crypto markets have grown up a lot in the past 3 years. In the past few months, DeFi tokens have been far and away the best performing sector in the cryptocurrency markets. I think the primary reason we've seen such growth can really be boiled down to a single factor. DeFi tokens accrue value. Now, most DeFi token models are designed in such a way that the token holders benefit proportionally to the network usage and growth. In fact, many of the most popular DeFi token models operate similarly to traditional equity, in which holders value the asset based on the fees earned by the network, as well as the ability to help govern it. So by combining some of the best aspects we've seen of token models of the past, DeFi tokens represent a really compelling long-term investment opportunity, giving you a piece of the network activity fees while also accruing value as they gain popularity. I think what's exciting is that we're still on the precipice of DeFi token experimentation. These initial models are really strong uses of a token, but I believe the stage is set for even more innovative uses. To see this in action and to better understand how we make money with DeFi, let's illustrate this with an example. Let's look at how we can use some of the largest DeFi protocols together, MakerDAO, Compound, and Uniswap, and how that can generate multiple streams of income. These are all built with the Ethereum public ledger, and together they have crypto assets under management representing about half of the overall DeFi lockup. Now, MakerDAO can be thought of as a secured lender. They take an asset you own, currently crypto assets like Ethereum, and allow you to take out a loan against it. And this is all a programmatic process. There's no human intermediation. The process of going from Ethereum to a loan against that Ethereum takes only seconds. What's important is that my Ethereum is safe, not because it's being controlled by an individual or company, but because it's locked up in an open source contract that can be audited and is run on top of a public network. Unlike with a bank, if MakerDAO, the company, went out of business tomorrow, I'd still have complete access to my funds. Now, what's cool is that once I lock up my Ethereum, I can borrow against its traded value. In return, I get the stablecoin DAI, which is exchangeable for about $1. I can then take that DAI and send it to Compound, where I can earn an annualized interest rate of about 4%. It fluctuates. But what's important is that this is like a bank interest rate. And if I would prefer not to hold DAI and instead prefer to hold USD, well, I can then take that DAI and swap it out instantly for true USD or TUSD on Uniswap. Finally, if I choose to, I can take that true USD and request that money that backs it be transferred from my current account into a bank account. That entire process, from borrowing my Ethereum on MakerDAO to depositing DAI with Compound to earn 4%, to then withdrawing it again and swapping the DAI for true USD, then sending it to my bank, well, that all took less than 30 minutes end to end. So here's why, even in its nascent form, DeFi is extremely compelling, even for the lazy investor. Instead of having that Ethereum just sit around collecting dust, hoping that it goes up, I can put it to work. I can have it go out and earn me 4% interest. And if someday down the road, the price does indeed go back up, and I want that Ethereum again, well, I just repeat this process backwards, And lo and behold, I am now the owner of my original amount of Ethereum, plus the interest that I just earned by having it loaned out and making me 4% interest. So I get to double dip in terms of the interest accrued and the value appreciated. And that doesn't even begin to get into the more complex and more exciting aspects of DeFi bubbling to the surface right now. Yield farming, which is this process, but looking for the most advantageous way to lock up your assets and get returns on them. But the amount of opportunities it presents to traders to earn interest on their capital is seemingly doubling overnight. It makes a lot of sense to the users in the fact that most digital assets and tokens are kept on exchanges doing nothing when they could be earning interest. And the respective decentralized exchanges, or DEXs, have spreads that are competitive and offer higher lending rates than centralized exchanges. Even within DeFi, we're starting to see that competition play out. Instead of lending out on Compound, you could instead choose to lend out on Aave or Uniswap, which have more competitive rates right now. The market changes over time, but that's part of the excitement. So is DeFi just copying existing financial products? Well, not exactly. The internet was a revolution caused by standardizing the protocol over which information could be programmed and interconnected. In this same way, protocols like Ethereum aim to standardize the way in which financial assets could be programmed and interconnected. And so today, that lack of standardization and the lack of a single network across which all assets could be programmed and connected, well, that creates a huge amount of friction that requires many layers of intermediation and manual processes, which makes the existing system expensive to maintain, slow to operate, and really incapable of keeping up with the rapidly advancing pace of technological advancement. I mean, just maintaining the legacy financial system and all of its inefficiencies and all the manual aspects of it, well, that alone costs the world an estimated 0.05% of global GDP every year, or approximately $71 billion. However, this is only looking at the problems that already exist, not what new products may be capable of creating with this technology in the future. The internet is a great example, as it did both. First by emulating what came before, as an example, email, and then later creating entirely new paradigms, social media. So DeFi represents an unbundling of financial services that can be stitched together via a unified decentralized public protocol. And if the internet was the information revolution, well, this is the financial asset revolution. Ultimately, these innovations will largely be invisible to the everyday consumer, who would simply benefit from faster, more responsive, and more cost-efficient financial services with better rates of return and more accessibility. But in contrast, the financial industry is likely to be unrecognizable within the next 20 years, where programs rather than institutions form the basis of almost all financial services. DeFi isn't just a replacement or an upgrade or an evolution. It's a stepping stone to what's to come. And so, in that regard, it represents the best of crypto, a vision for the future that is more egalitarian, accessible, and above all, decentralized. I also want to say that, as I pointed out on Monday, we made a trade of the day call on Tesla, which just went ballistic with their stock split news. So you're welcome. But for those who don't know what I'm talking about or haven't signed up yet, you can get on our free Discord where we give away a free trade of the day, showing you exactly where the entry point, stop loss, and occasionally how we set up an option strategy to help you minimize risk and maximize the return. There's no catch, we just want to build a really good community of like-minded traders that value quality and education just as much as profit. So I can't wait to see you there. Links are in the bio below. As always, thanks for watching the video. If you had any questions, be sure to leave in the comments. And if you're not subscribed already, and you liked the video, well, it may be a good idea to click that subscribe button as well as hit the like. It certainly helps me to beat the YouTube algorithm, so I appreciate it. So until next time, be good out there. Cheers.